or the Asian markets are well in the green.
Very near term, on the Nifty bank, support should come in, and the bank Nifty should not break 45,670.
Because from RBI's point of view, it might be that the bank is being regulated, but the fintech is not being regulated.
For Bata, there is a struggle for sales growth. In fact, the growth is just about 0.4%.
So you have the Nifty bank that, in fact, has been outperforming.
I somehow think that the government assumptions in the fourth quarter on the tax side or the direct tax side are actually too conservative.
The other one is there a possibility of relieving some of this liquidity stress even over this 2-month period?
Markets are flying. We've got the benchmark indices up over 1%.
I think the participation has been excellent. The momentum is anyway very, very good.
Now, being a public company, I think it will be fair for us to first cross the finishing line of closing the transaction.
We really have a very good set of moves that we've announced today, where our group CFO moves on as CEO of Mahindra Holidays, a listed entity.
Looking good for the markets, Pavitra, and it is a day where we hit another record high.
Okay, it's a full house here on this edition of Closing Bell. We are coming to you from the CNBC-TV18 Motilal Oswal studios. Markets hitting a new high and then pulling back some. I'm Prashant. With me, my colleagues Rima, Surabhi, Nigel. Guys, hi, afternoon.
I must say that when we look at this half of the screen, the two of you, it feels like Monday. When we look at this half of the screen, it's feeling like a Friday. So we're evenly balanced.
Why is that? What is
the blue and the black and the colors and the pink? But as long as we're balanced, I think we're fine.
All right, it's a new high. I think that's what we're going to start by saying. And that happened early on. The market started on a strong footing, and then actually, if anything, picked up pace from there. I think it was a 2-point higher high, which basically led to a new all-time high on the Nifty. But then there's been a sharp pullback since then. So a 400-point Nifty rally has been reduced to 150, 170 odd point, right? Looks bad, but 170 on the day. Just don't forget about the 400, 170 on its own. It's as good as they come. Actually, I was wondering, usually budget days are pretty volatile, up and down. It was not so yesterday. Yesterday was very, very quiet, so we perhaps got the reaction one day late, at least in terms of the volatility. PSU banks, actually it's PSU of all sort of hues and color, which are flying. Banks, energy, the entire CPSE basket. Of course, energy, PSU are, many of these stocks are, or the part of the CPSE index, but between 2 and 4%, but it's all PSU. Bank Nifty is not doing very much. It's just about 0.25% higher, despite the PSU Nifty, the PSU stocks flying high. And that's because private banks, as we've been saying, they've been struggling. So not very much action there. For the Nifty bank, resistance is 46,824. And we're about 550 points away from there. That's a 61.8% retracement of the fall. So all of the action in the Nifty, but very little action as far as the Nifty bank index goes. Rima.
At least on the PSU sides, there is no pullback that we've seen in the last 2 hours. So the CPSE index is still at the day's high, up close to about 3%. In fact, if you look at the Nifty gainers, it's all the PSU. So it starts with BPCL. Then you've got, and BPCL is up 10.5%. Just imagine the quantum of gains there. 10.5% on BPCL. ONGC has a rally of 4.5%. Then you've got Power Grid with the third position at 4%. You've got Coal India, NTPC across the board. Even outside of that, in the mid-cap universe, all the other oil marketing companies are flying, but you've got SCI with a gain of close to about 10 to 11%. EIL has a gain of 14-15%, and that list of PSU gainers is pretty long.
I was just looking at BEML Land, which is on a 20% circuit. I think people are out there looking for any stock that has Government of India holding in it and just going completely after it, hammer and tongs. But I would very much want to see what happens with the FPI number today, which perhaps can explain the kind of cool-off that we've had, given that huge surge around 11:30, 12, and then the subsequent cool-off. Because let's not forget that after a deluge of 65,000 crores in the month of December, January has seen selling to the extent of about 26,000 crores from the FPIs. Yesterday was first day of February, and we again had a net sell about 1,800 crores thereabouts. So let's see if FPIs will keep selling into what is otherwise a strong market with so much of domestic participation and liquidity coming in. Just a couple of stocks perhaps worth mentioning. Paytm, of course, there's no change whatsoever. It's still that 20% circuit down locked in. On the upside, you've got some good result reactions. But today, Castrol's numbers probably stand out. That one's been higher. Abbott, Precall, these are some of the mid-cap earnings that have done really well. But then, overall on the mid-cap screen, it is fairly sort of somber in the sense the gain is more measured, just about 0.6%. But I'm watching out for who's buying and who's selling in terms of those institutional numbers at the end of the day.
Well, that's right. We'll keep an eye out. It'll be post-market hours. You please update us on, what's going to happen because the weekend will already be here. But I'll tell you what, PSU and metals. And if you have that combination, then it's doing really well today. So you look at Hindustan Copper, that stock is now a 300 rupees stock. Big up move is what we're seeing on that stock. You have SAIL as well that spiked up in the last few minutes. So SAIL has moved higher. Just pull up the intraday chart out there. NMDC has more than enough triggers. We've been highlighting that as well. Volumes have been spiking up. Pricing is strong as well. And the balance sheet is clear now because you have NNBC Steel that's moved out of that. So all of them, metals and steel, if you have that metals and PSU, if you have that combination, then in fact, it's doing very, very well. Just take a look at all of those stocks flying away. Kush Bora joins us to help us out with how do you trade the index. Well, Kush, we thought we were dancing away to fresh all-time highs. Maybe 22,100 odd was on the cards. But from there, we have pulled back a little bit. Added on 21,860. What's your view on the Nifty?
Yes, Nigel, a very happy Friday to you too. Well, isn't that the effect that we're seeing play out on the indices? I still maintain what I have been saying for the last January, for the entire January, 22,200, 22,500. These are the levels that we're looking at. Came fairly close to the first one, but I'm not surprised to see some sort of profit booking, although it's a little too drastic. But it's all right. The reason is that the bases are shifting higher for the Nifty from 21,300, 21,500 to now 21,700. So that's still an encouraging sign. I think Prashant was mentioning something about the budget effect coming in a day later. That's perhaps due to the Bank Nifty or rather the Nifty weekly expiry. If you saw the options data, Nifty reacted precisely or rather more to the options expiry data rather than the budget, and we're seeing that reaction today. On the whole, I would position myself on the long side. For me, a near-term support comes in at 21,700. I will still stick my neck out and say 22,200 and 22,500 are the levels that we're looking at on the Nifty. Bank Nifty, I would have loved to see a closing above the 50-day moving average, which is 44,600. But even here, a couple of interesting things that the index has been making a higher low pattern for the last couple of sessions, and I will take that also with both arms, especially both hands rather, with the big private banks not chipping in. So 46,800 is our near-term target on the Bank Nifty. 45,700 is where we have the stop loss. All in all, bullish on both. A little cautious on Bank Nifty, but otherwise bullish on both.
For the week, the Nifty is up 2.5%. The mid-cap index is up 3%. But you've got names like L&T. L&T is down for the third day in a row post its numbers. And for the week, it's lost close to about 6%. Titan, ITC are the other two notable drags this week, with a cut ranging between 3 to 4%. What would your stock recommendations be for today, the last hour?
Incidentally, they happen to be in the spaces which Nigel just mentioned, which is PSU and metals. The Union Bank and NMDC are the picks that I have on my radar. Union Bank, the stock isn't usually as frequently discussed as, Canara and PNB, but it's been doing fairly well. 152 and 155 are our near-term targets. 144 is where I would place my stop loss. NMDC too has actually given a breakout after quite a bit of struggle of the last 10-15 odd sessions. 225 was the resistance. It's taken that out. So 245, 260 are the next levels to watch for, and 225 is where I would place my stop loss.
Okay, all right, got that, Kush. Thank you very much for the trading calls. We'll touch base with you again in a bit and look at how the market shapes are. But let's talk about the sector of the day that's really stealing the thunder and how. And I am talking about OMCs. If you look at BPCL, the gain is 10% now. That's what we're looking at. Let's go across to Sonal and understand beyond the momentum and beyond the excitement around budget, etc., whether there's anything sector-specific that could be behind this move. Sonal?
Well, thank you for that. All marketing companies outperformed last year, and that outperformance continues now as well. Yesterday in the budget, the government said that they are talking about putting off the equity infusion in state oil companies till next fiscal. This was an overhang, something that all the brokerages spoke about in the results as well, and that has been put off till next fiscal. But if we look at the returns on these stocks, year to date, HPCL is up 23%, we have BPCL up 23%, IOC is up 24%, and HPCL is up 15% this week, which is the best best week in 2 months. BPCL is seeing the best single day since July 2020. It is up 17% this week, which is the best in 3 years. And Indian Oil is seeing the best single day gain since January 2013. This is the best week since May 2024. So we are seeing this big move coming in across the three names. Now, in terms of valuations, all of them trading anywhere between 8 to 8.5 times. This is 1 year forward earnings, and they are now trading at 11 to 15% premium to their long-term average. Now, they have some of the triggers going forward in terms of their capex, in terms of their refinery expansion. For HPCL, it is a long list. They are raising their refinery capacity both Vizag and Barmer. They are planning to invest 75,000 crore rupees over the next 5 years. They are forming a wholly owned green subsidiary. They are also talking about lubricants demerger. Some of them are yet to be commissioned, and that is something which will be the next trigger. BPCL is talking about 1.5 trillion capex in next 5 years. They've also signed an MOU with subsidiary of Tata Motors to set up EV charging stations. So that is something that they are getting into now. IOC has some capex to be completed, 3 refineries which will see expansion and will be commissioned as well. So there's a lot happening in terms of refinery capacity addition and getting into the renewable sides of business as well. So that would be the trigger. But as I said, the putting off of the capex or the equity infusion from the government, especially in BPCL and IOCL to next year, which was an overhang, is not there anymore. So we'll watch out for details next year. And of course, it's a general election year. So anything in terms of marketing margins is also something we'll be watching out for.
Sonal, when you speak with analysts who track the sector, is there a general belief that, by the way, I was surprised when you said, they're only 10-15% higher than long-term average. After the rally, I thought the gap would be much larger. But is there a belief that they should now be trading at much higher P multiples, because there is that effect also that what do you get at 8, 9, trading at under 10 times earnings? So is that a sense you get? Yeah.
The case has been that all these oil marketing companies have always been trading at these levels. BPCL once traded at 11 times. That's when we were having those divestment talks, and it became the most expensive refinery stock in the world at that point in time. But it has come off from those levels. But yes, like any other public sector undertaking, they are still very cheap. They are still very reasonable. But nobody really believes that it should be above that 10 times level, because right now they are way higher, as you said, than their long-term averages. So analysts are comfortable with these levels on stock prices.
Okay, by the way, since we're on the subject, I'm just looking at a Fitch note on OMCs that's hit my inbox right now. And Fitch is saying that after a great FY24, expect OMC's leverage levels to start rising and maybe returns to start moderating. And why do they say that? They're saying moderating profitability, rising capex for, of course, the energy transition projects that they're incurring. And perhaps some moderation in margins as well. But that's Fitch for you, saying that maybe the coming financial year won't be as good in terms of just the business, dynamics as FY24 has been. That's one more view, Fitch. But thank you very much, Sonal, for giving us the update today. The stocks are absolutely roaring up and away. Prakash Diwan is with us. Prakash, hi, good afternoon and happy Friday to you. What do you even say? 10% on BPCL. I don't know how to frame the question, looking at the PSU rally and within PSUs, these oil marketing companies. What's your take?
Good afternoon, Subhi, and of course, wishing you and Nigel, since you are the Friday variety, and
Friday party.
Not Rima and Prashant, but then of course they also deserve a good weekend after all the hard work you guys have put in yesterday. So I think it's very clear. Most of these oil marketing companies and refining companies actually were traded at very soft valuations, because we had 2 wars, starting with the Ukraine-Russia war and of course then the Israel-Hamas disturbance. And both of them were likely or potentially disruptive in terms of the oil prices. But nothing of that sort has happened. I'm quite surprised, and that's what explains the exuberance that's come back, that oil has actually not shot up in spite of all of these geopolitical tensions. And if you recall, IOC at about 90 declared that dividend, where the yield itself was about 10.5%. That was the first time you started getting an indication that they will continue to throw up cash. They will not need money to invest or reinvest at this point in time into the capacities. And that's where the re-rating started in a ferocious way. So when Sonal actually put it that it was 23-24% for the year, just spin that and make it look like it's just 23-24% in a month. And things start, explaining it themselves. So I think the re-rating has been more because some of the private sector peer group has been valued much more richly. And though they might be 10-15% above their long-term averages, I think it's a reset that you'll have to live with. It's efficiencies, whether it's a Coal India, whether it's, some of the, Nigel was talking about PSU and metal as a combination. Look at where Nalco is, look at where Hindustan Copper is. Nothing much has changed, but the PE expansion has been a bit of a belated move for most of these players. So I personally feel this is here to stay. You might have a little bit of a softness if there's a sell-off that comes through. But the FOMO in the market, definitely makes these stocks very, worthy of having in your portfolio, because there's a lot of liquidity also around these stocks. It's not that you have very limited floating stock. So this will continue. It's just that, the major part of the gains have already been front-ended. So you might not have the same kind of return going forward, but they will outperform the market for sure, given their sweet spot that they're in.
Sandeep Tandon from Quant, and I'd spoken to him about a week ago. He was, what you said, right? If you can find, he says, I like PSUs, I like metals. And if you can marry both, that's the place. But, he of course tracks a lot of data, both on the macro side and bottom up as well. So, for example, a big call of his has been Hindustan Copper, which he bought under 100 rupees. Now, of course, I think it's cost 300 today. I think he owns Nalco as well, and many others. So this is absolutely, the combination which has worked very beautifully.
Okay, let's move on and talk about PSU banks, because they're higher in trade amid expectations that the drop in bond yields will improve the treasury gains for most of them. Abhishek is standing by with the details on this. Abhishek.
Well, as you mentioned, the decline in bond yields is being factored by many investors after yesterday's budget speech. So positive news for PSU banks is that the FY24 budget deficit has been at 5.8% of GDP. FY25 is about 5.1% of GDP, and target for FY26 is largely to retain the deficit at about 4.5%. So prudent fiscal actually, aids in decline in 10-year GSEC. Gross and net market borrowings through securities in FY25 is estimated at 14.1 lakh crore and 11.75 lakh crore respectively. FY24 gross market borrowing is lower than FY23 borrowing, which was about targeted at 15.4 lakh crore. So lower borrowings can aid in bond yields, to soften going ahead, and this can actually help the treasury gains for many PSU banks who have a large part of their portfolio in SLR or, the treasury side of their business. So if you take a look at the price movement, over the last 1 year, it's been massive for some of the PSU banks. Bank Nifty is up nearly about 13-14%. Nifty is up about 24% plus on a YY basis. But take a look at PSU stock price movement. SBI has gained about 24% plus. Bank of Baroda has gained more than 67% in terms of stock price movement over the last 1 year. Canara Bank above 81%, and PNB, which has been a massive outperformer, has gained more than 146% in terms of stock price movement. And if you take a look at the valuation change on a 1 year forward basis, highest valuation change has been for PNB, which is followed by Canara Bank and then Bank of Baroda. However, SBI's 1 year forward valuation in terms of price to book value multiple has increased to just 1.4% versus 1.3% that it was trading last year same time. Back to you.
Thank you, Abhishek, for that. In fact, if you could just keep that valuation plate of price to book value on for a little longer. Prakash, particularly Canara Bank and PNB, because that's where we've seen the maximum valuation re-rating. Would you be a bit cautious on that?
So, Rima, interestingly, what's happening is that people keep starting off with the most obvious, selection of names within a turnaround theme or a sector. And that's where you had SBI and Bank of India, and to a large extent Bank of Baroda as well. But of late, what's happened is when you go down into the value chain, you start realizing that there's a Canara Bank that's doing well, a PNB that's completely joining the turnaround. So, you have people coming in for that. So it's a lot of that is PE expansion or liquidity driven. It'll be very difficult for some of these mid-sized banks like Canara Bank, Bank of India to be able to sustain the kind of earnings and the kind of metrics that they have started adding up. Whereas for an SBI, which actually was way ahead of all the others in terms of cleanups, in terms of expansion, in terms of managing the ALM mismatches, they will actually be able to glide through this entire critical phase of interest rates, peaking out in a far better way. So just imagine what happens when, come, let's say, second half of calendar 24, and you start getting the first indication of interest rate cut. That's where some of these banks will be able to flex themselves into growing at very good spreads. And the spreads will probably be faster to accumulate in an SBI or to a large extent to a BOB, but not so much in a PNB. So I would not look at them just because they're available at reasonable valuations from a price to book. But historically also, PNB has never been more than 0.6, 0.7. And Canara Bank probably at some points in time has been close to 1. So, it's not that they are undervalued anymore, but you'll have to kind of start playing along with the momentum and switch a lot of your allocations within the PSU bank space. There could be smaller banks which will start looking very smart at some point, if not SBI. So that's the whole call. But you know what, at market peaks, you would rather be with the leaders so that your drawdowns are much more manageable and tolerable. So from that perspective, an SBI BOB definitely still could be added to if not, bought afresh.
Okay. Got that. By the way, those are not very inspiring numbers from Century Ply. The EBITDA is down some 17%. Margins have compressed year on year as well. We were just having a conversation with Greenlam earlier in the day, and the clear takeaway was that a lot of dumping is happening from the imported products that are coming in the market, and they're finding it tough. So volume growth is very, very hard to come by for some of these companies that are operating on the plywood side or the MDF side. So anyway, that is a separate sector. Greenlam, however, is perked up. The management is saying at best they will keep volumes flat this year, best case scenario. Anyway, Prakash, I wanted to discuss another sector with you, and that is QSR. I was looking at Devyani's numbers, again, very uninspiring. I mean, EBITDA level, there's a crunch, margins are crunched, profits are down. Top line is up some 5-6%. Now, if you go back to how, Jubilant has performed, or look at Westlife's numbers, this has been lingering for a while, this sort of phase of underperformance, right? So what's the thesis here? Is it passing? Or we keep talking about, of course, more options now on our Swiggy and Zomato and different eating habits, etc. But I'm just trying to understand if this is a deeper issue that's beginning to now take form within the QSR space, and what would you do with the stocks?
So that's an interesting point that you raised, Urbi, because Jubilant, which has been the darling of the market for a long period of time, has been disappointing. Not just the last 3-4 quarters. I think it's now virtually 7-8 quarters that their SSS or single store sales growth has been very tepid. The reason is very simple. They are struggling to, of course, apart from all the leadership changes and things that we've seen, they've been struggling a lot to actually get the product mix right. And pizzas as a product, as a unitary product, is not something which you can grow with. Whereas some of the other names which also offer, like Westlife we mentioned, the reason why Westlife has actually been far better off, even in the slowdown, has been because they have a significant portion of their in-store dining as compared to just takeout. So that model is something which is undergoing a little bit of a metamorphosis. And my sense is that Jubilant has been showing signs of struggling because they've started trying to get into Chinese stuff and biryanis and all of that, because pizza by itself, and that's exactly why even Devyani has been suffering. If you look at the segment in QSR, it's going to be people who manage their costs, and especially the real estate related costs, very, very effectively. From that perspective, I think RB, a restaurant brand Asia, which is much more diversified in terms of the geographies which they are present into, and they're doing very well in most of the places where they are globally present. I think you would be better off taking something of that sort in your portfolio, which has resilience, which has a very lean cost structure. And it's not that that's performed or outperformed so much, but Westlife has already become close to 8-10 times in the last few years, 4 years, maybe 5 years. But RBA, which after its listing hasn't actually been given that kind of a premium valuation. So there is a shift that's happening. People will move out, and most FIs have actually been offloading their stakes in Jubilant. So there's not much that I would believe will turn around unless the business model sees some sort of a tweaking. But it's still going to be a struggle. The spends haven't come through. The average ticket size of spends has also come down. But the burger side, you make money even if somebody was to buy at $150. Whereas in pizzas, the minimum ticket sizes are $350 and onwards, so which is difficult for them to grow with. So yeah, there's a little bit of a reset, and I would believe the burger guys would probably actually be better off as compared to the pizza guys.
Now we know who's ready for the weekend, huh, Prakash? Now we know who's ready for the weekend.
But I'm sure he's ordering neither burgers nor pizzas, something far more exotic and something far more interesting. I'm sure of that, Prakash.
Yes, absolutely right. I mean, yesterday was a long day, so we all deserve a very relaxed, fulfilling weekend, right? So food and drinks have to make up for that.
Absolutely. So leave you to it, Prakash. Have a good one, and we'll connect again next week.
You too.
Thank you very much. Time for a quick break. We'll come back on the other side. The market conversation continues. Shiv Sehgal of Nuvama will join in.
back. The Nifty is at 21,842, again 140 points at the day's high. The session highs, the Nifty again close to about 400 points. We've got Shiv Sehgal, President and Head of Nuvama, joining us on the show now. Shiv, afternoon, and thank you very much for joining in. While we're celebrating and, India's stupendous rally over the last couple of, months, and particularly in the last 6 months, investors are also taking note of China's underperformance and its valuations. You recently visited Hong Kong. Tell us how investors are comparing India versus China. And do you think money can move to China because there is a compelling case given the valuation difference?
Thanks, Emma. Firstly, thanks for having me on the show, and a very good afternoon to everyone. So you're absolutely right. Before going into the meetings in Hong Kong, I was of the view that, China looks so cheap. We've been talking about it for a while that, should China have sprouts of green shoots and, the stimulus measure that's been announced, markets, if they tend to rally, the large institutional investors will move away from India and allocate a little bit to China. But it seems to me that the pain and the despondent view on China is so much that it looks very unlikely that that view would actually turn out that way. And to understand that, I looked at a lot of historical biases here in terms of foreign flows. Right. We all know the stats that in the last 3 years, China and Hong Kong have wiped out almost 6 trillion worth of market cap. And what that's resulted is there is both a financial pain plus the largest economy, which is 67%, 60 to 70% of real wealth in China sits in real estate. And real estate stocks, if you looked at just the listed space, Chinese listed space, the total market cap has come down for almost $400 billion to $90 billion. Whereas India has gone from the other way, and we have now moved up to 60 billion. So the gap, which was multifolds, is now hardly a gap in that sense, and China is a much larger market. The other element is the FPI flows. From 2015 to cumulatively right now, China has seen an inflow of 562 billion. Last 2 years, the outflow has been about $160 billion. So China is still sitting on a net inflow for FPIs of $400 billion. Now, if you compare to 2015, if I take the same dates and I look at India, we are at a paltry $55 billion. So it shows you the kind of, the outflow that can still happen from a momentum into a momentum market like India, and of course the structural story and the transformation design that we've been talking about from an India perspective. And that is one of the key reasons and elements I keep talking, that liquidity and momentum along with good macro background will result in the bullish story that we continue to see in India, and we are seeing that today in the tape as well.
But well put. But as they say, Shiv, right? You'd agree they don't ring a bell at the top or the bottom, right? So at some point it'll turn.
Absolutely.
So do you think there's? But you don't see any case immediately. That's what you're saying. I mean, you wouldn't put your money to work. The last time people tried to do that, especially in China Tech, they got burned again. There was another big dip which happened. Any chance of that now? Yeah.
So Nigel, very well put. I think, a lot of hedge funds actually in October of 2023 went long China, right? And China is down another 20-30% from the entry point there. So you see, the reality of life is cheap can continue to keep getting cheaper, what we have seen in Japan as well. It took 30 years for the Nikkei to come back to all-time highs. And of course, the last couple of months, actually, Japan has been the darling of the markets. It's actually outperforming India. Japan actually saw 17 billion worth of inflow. Of course, it's a developed market, it's a different story. But the reality is that there will always be value pickers who will continue to kind of bottom fish. And China looks like that, those markets. But the reality is that the flurry of recent optimism that resulted because of the stimulus measures has continuously faded and faded very fast. Even I was surprised with the fade in that optimism. And that's a result of, the government is increasingly looked as feckless and lacking the will or the ability to provision a meaningful stimulus in China. And that's the reason. That's why I think, it would be, I think, very difficult to call the bottom, as historically it's always proven that way. And the one thing I do want to say, Nigel, is that, there are pockets within China that look, even if you're not a value investor, like the state-owned enterprises in China today are at a dividend yield of 8 to 10%. The bottom, if you look at the government bond yields, the 2-year yields are around 2%. That to any investor looks very attractive. And I think it's only a matter of time when the international community and the domestic community in China, realizes that. And in maybe 2 or 3 quarters, maybe even sooner, I could be on your show and talking about the fact that, China SOEs has been the best investment.
All right. Hi, Shiv. This is Nigel actually here. Earlier it was Prashant, but good to have you on the show. Yeah. So you have convinced us that, with your interactions that India is still the way to go. So that's pretty good news. But so what do you buy in India then? That's the basic question, because a lot of our audience out there, they're wondering, what should you be looking at? And in the last week or so, everyone was talking about maybe PSUs, they'll consolidate a little bit. No ways. The PSU banking index is up close to 12% for this week. Tell us more. What do you buy out here?
So, very rightly said, I think in any bull market, right, the first thing that we need to realize is that a large structural bull market will continue to see rotation within sectors, right? I mean, we have seen what's happening. If I look at just 2024 start, right, we have the industrial services, the oil and gas, and the OMCs doing very well. And I think those things will play out. You know, real estate a couple of weeks was rallying a fair bit. And what happens within that structural bull market is that money gets deployed. You see these immediate gains. And of course, there will be, you know, short-term profit takers, and then you'll see a consolidation within that space. As I said, I think it comes down to the bottom line where you stick to your high conviction, good quality companies, irrespective of which sector, and of course, which sector rotation will continue. I think pharma looks very interesting. Tech, despite the fact that, you know, people were very negative going into the earnings season, has had a good rally as well. PSUs, please understand that, you know, like real estate in India, we went through a hiatus of 10 years where it was consolidating and we didn't see gains. And now every month, the transaction volume being put up by any real estate developer are hitting all-time highs. And PSUs, right, the similar trend has started only about 2-3 years back. So a bull market and a structural growth story can continue far longer. I've gone on record saying that, you know, in India, the bull market will last. This is at the cusp, and we are, you know, for the next 3 to 5 years, it's India's story, and we can talk about 10 years as well. But what also dictates a lot is flow and momentum. You know, NASDAQ has been rallying for it started in 2009. It's been now 15 years, and we keep, you know, naysayers keep coming and calling it a top. The reality is that, yes, it looks very expensive, and fundamentally, can you justify these numbers? We are nowhere close to that reality. Yes, the mid-caps had a great run over the last 9-10 months, and you will see some time consolidation, which is very healthy. I actually think a pullback would be very warranted by the smart money. There are a lot of pockets and large asset allocators looking for a pullback to come into India and you know, get at better levels, which has not transpired. So should India see a pause or a consolidation, you know, I think India remains a buy on dip market, and I've continued to say that because structurally nothing has changed. A bull market will only correct because of external factors. And at the moment, you know, things seem to be primed for a lot more bullishness in India.
Shiv, just finally, very quickly, hi. Just your sense on financials. What's the house call right now? Because I think that's been the biggest point of debate at the end of third quarter. And I know you don't get into stocks, but I mean, if you can give some sort of a view on, again, what's the house call around Paytm and the kind of regulatory action that we're seeing. Actually, it's Paytm is company specific, but even otherwise, I mean, the RBI has really been keeping banks and you know, financial lenders at the edge of their seats with respect to a lot of action over the last 3-4 months.
So you're absolutely right. As I said, I think the banking space, I think the ownership from an institutional perspective was all-time highs in the banking space for the last 1 or 2 quarters, maybe slightly longer. And I think that the next set of rotation, in my view, could be the financial space. A lot of the large caps, private banks have not had a significant rally in the near term. I think maybe if we speak in a couple of months or 1 or 2 quarters, I think that story could play out very differently. Credit growth uptake has been an issue from a large scale perspective from India. But given the budget is behind us now, at least the interim budget, and now we'll see if there is any tinkering to the tax part in July. I do feel that you're spot on. We feel that from a financial space perspective, we have been advising clients that, you know, it's time to get your toe back in and dip a little bit in some of the large cap private banks as well. But of course, the PSU banks are where the rally is, where the momentum is, that can continue. You know, with the fiscal deficit being announced yesterday and the entire bond inclusion, you might see the PSU banks continue to kind of outperform the private space just in the short term. But, you know, I would be a buyer of large cap names as well in the private space.
Shiv, great conversation. Thank you very much for providing your insight. Enjoy your weekend. Moving on now. So giving a boost to the affordable housing in the budget, yesterday the government announced a new scheme to help the middle class buy or build their own homes. On the back of this, Shivani Bazaz caught up with Mr. Manoj Joshi, the Secretary of the Ministry of Housing and Urban Affairs, and started off the conversation by asking about the importance and plans for urban housing and planning. Listen in.
Urban housing is a very high priority for government, particularly affordable housing. Honorable Prime Minister had announced on 15th of August, and Finance Minister also said that a support to urban housing, affordable housing and middle class would be provided. The scheme is being worked out to provide support for the loans they take. But urban housing, particularly affordable housing, we are having a shortage, and Government of India's priority is to work with the states and urban local authorities so that urban planning process generates enough affordable housing. The entire urban planning process should make developers provide at least 15% or more houses for affordable segment.
What is the kind of push that the government is doing in this to, provide benefits in terms of taxation or in terms of other things to the real estate developers as well as the home buyers?
In the current financial year 2013-14, Government of India had provided 20,000 crore rupees as a special central assistance to states to carry out urban planning reforms, which includes adopting town planning schemes, township development schemes, hiring more urban planners, changing the building bylaws in such a way that affordable housing becomes, the costs go down, providing certain reservation for affordable housing and necessary reforms, including on the drainage side, on the master planning side. So 20,000 crore is a large amount, and states have carried out a lot of such reforms.
Welcome back. Well, the Nifty Bank has given up some gains. In fact, it's well in the red now, down close to around 200 points approximately. You have IndusInd Bank that slipped a little bit more. Axis Bank as well has taken a bit of a knock, so that's moved lower. And Eicher Motors is down close to 2.5%. So all these three stocks should come up for you. At the bottom of your screen, you have EIL's numbers. The stock has seen a big run. I remember around 40-45 days ago on this show itself, we were highlighting that maybe there's big amount of volumes out there. And delivery as well was fairly good. And those numbers are looking very good. And that's why, in fact, that stock has seen a big run. Revenue, not much growth, but operating front, it looks quite splendid. And that explains why the stock is up close to 15%. And rate gains, the other stock as well. So you were just telling me about those numbers as well look pretty good. So rate gain should come up for you on the screen. Just came out close to around half hour or so ago. Wow. Stock up 7.5%. Well, time to get in. Nimesh, yes.
That's a big, I mean, actually, I checked about half an hour back, Nigel, it was down 3%.
Oh.
So that's a big 10% move from just the day's low. So I guess nervousness right before the numbers came through. And then, of course, a very sharp move. I remember the last conversation with the management, and it was pretty similar in terms of their growth guidance to what we got from PB Fintech recently, 30% for many years. Is what they said, right? And I think similar was the number from RateGain as well. Total growth, organic and inorganic as well. Surabhi.
The profit has moved from 13 crores to 40 crores. The top line is up some, I think, 80% or so. I'm looking at the exact number, 82%. So the market's absolutely loving every little piece of it. That is rate gain. The rate is surely gaining on that one with respect to the stock action. But let's go across to Nimesh now. He's been waiting by. Nimesh, what a day. Fresh all-time highs, then a cool-off, absolutely roller coaster week. And finally, it's coming to an end. So you tell us, what's the buzz?
Hi, Surabhi. It's a little difficult to explain today's move, right? All-time high in the morning trade, and then an equally sharp sell-off as well. And there was a big profit booking as well. I just want to share one number. The Sensex 71,500 put intraday rallied from 3 rupees to 300 rupees in a minute, in the fraction of just 3 minutes. That's the kind of volatility we've seen in today's market. So there is a lot of moves all over the place. Even while the Nifty is up almost 1%, the feedback is the FIs are better sellers. So I need to watch the institutional data very closely. In fact, it's showing up in some stocks as well. A lot of the institutional stocks are actually down in today's market. The only segment which is now defying gravity is the PSU index. Up another 3.5%. Big moves in the OMC stocks. The metals have now joined the party, and they are also rallying pretty hard in today's market. So it's like a different sort of market for a lot of investors. The PSUs, they're just having a fun party, and overall, but from the other market, there is a lot of profit booking as well. So FIs net sellers, a big volatility as well, and we saw an aggressive profit booking as well once we hit their all-time high in intraday today.
Okay, got that, Nimesh. What about individual stocks? What are you picking up, though?
Well, I can't miss on the PSU basket. So the first name is actually BPCL. Today's move on BPCL could be attributed to a large buying as well. So I understand there is a very aggressive FI buying, as well as there is a Morgan Stanley note as well. They've actually put out a tactical buy on BPCL today. So that probably explains a big move in BPCL in today's trade. The second name is Sensex. We don't talk too much about that stock, small stock. But again, from a delivery point of view, there is a lot of accumulation happening from larger HNIs in Sensex as well. And that's the reason why been buzzing on large volumes as well. So that's the second name. The third name is Shriram Piston. This is an interesting one. The stock is locked at 5% upper circuit today. But I understand the selling pressure from the global investor is now largely over with today's block. There was a small block of 2 lakh shares. Remember, the same global investor sold 9% to Abacus just 2 weeks back, and from there the stock has already rallied more than 50%. So big move, and looks like even at this level there are buyers in Shriram Piston. And the last one is Exide. Been buzzing in today's trade purely on back of large flows. I understand a domestic mutual fund is an active buyer in Exide, and hence a big move in that stock as well.
Nimesh, just one, we discussed this with Sonal earlier on oil marketing companies. I mean, if you've been able to speak with any investors, what's really the bet here?
Prashant, couple of bets here. One, if you look at the PSU as a whole, at least this is what I put out in my piece as well 2 weeks back. The OMCs and the PSU banks, that's where at least there is a valuation comfort for a lot of global investors. In fact, I was at a party last night on the post-budget, and a lot of larger investors seems to be quite bullish on the OMC space, purely because they feel that it's an irreplaceable asset. The balances have become quite stronger. Now they'll become actually zero debt companies as well going forward, and the valuations are at a comfort. So all put together, that probably explains there is still a lot of excitement even from institutional investors to buy OMC stocks as well as the PSU stocks as well. Just one word more, Prashant, on today's PSU rally. Remember, a very large fund is launching a PSU fund, and probably that explains a bit of excitement in the entire PSU basket today, because that fund itself is likely to raise between 2,000 to 3,000 crores in the PSU fund.
I think talking about some of these PSUs, thanks a lot for that, Nimesh. SCI is up close to 13% as we speak. Massive move. And for this week itself, it's up 25%. I think in the last 1 month, it's up even more.
It was up big time yesterday as well.
Yeah, and even at around 200 rupees, we had pointed out that there was big delivery buying on that one. This is, I think, around 20 days or so ago. Big move out there. NBCC is now locked in upper circuit, and NHPC is up close to around 10%. So big moves is what we're seeing.
ITDC is another one which is locked in an upper circuit for the second consecutive day. 10% today and 10% yesterday.
Okay, Kush Bora's back with us though to give us some interesting trading ideas. Hi, Kush. Before we let you go into the weekend, and you were looking quite jolly at the start of the show as well, give us some individual trading ideas, either a buy or a sell call.
Both of them on the buy side, Nigel. First one is cements. The stock's trying to break out of its resistance bands and create a new high. But even if it's not been able to do that, the stock actually showing a fair bit of strength. 40 to 10, 40 to 60 are my targets. 4110 is where I would place my stop loss. L&T Finance is another stock which has given a fair bit of breakout. 178, 182 are my targets, and 171 is where I would place my stop loss. And also looking forward to a fabulous, perhaps a double century by Yashasvi Jaiswal tomorrow, or who knows, even today.
All right, Coach, thank you very much. Have a super weekend, and thank you for joining us with your trading calls today. Well, since we're talking the weekend, let's actually remember there are still big earnings to look out for, and we'll, of course, take stock of all of that on Monday. Tata Motors will come out today itself, and then there's the SBI over the weekend. Let's bring in Sonia first to get through the key expectations for Tata Motors. Sonia?
Well, thanks a lot for that. For Tata Motors, it's expected to be a really good set of numbers this time around. Jaguar Land Rover business has been very strong in the quarter gone by. The margins are expected to improve as well. So overall, the numbers will be very healthy on the consolidated front. However, on the standalone business, the commercial vehicle sector itself has been in a bit of a slowdown. In fact, this time as well, the commercial vehicle volumes are just flat on a year-on-year basis. And the passenger vehicle business for Tata Motors has been largely stable in the domestic market. But the real kicker will come in for Jaguar Land Rover. Also, if you remember last quarter, the company raised its guidance both on the EBIT front as well as on the free cash flow front. So any indication of that will be very closely watched. The stock has been a big outperformer. In fact, it hit a record high of 900 plus just a couple of days ago. It has, almost doubled in the last 1 year. So all eyes will be on the numbers. Very, very strong set of numbers expected from Tata Motors.
Thank you very much for that. And the other big one will be State Bank of India, but that's tomorrow. We'll get into a very short break. On that note, on the other side, we'll discuss market closing. Sudhir Bandopadhyay of IndiTrade Capital also joins in next.
Okay, 145 points higher is where the Nifty is at. We were up 400. So you look at that and then, of course, it's off the highs. But this is a solid session that we have. Sudeep Bandyopadhyay is with us, Group Chairman at IndiTrade Capital. Sudeep, what are you telling your clients? I mean, I'm sure you get questions. You get asked what to do in PSUs. And, the only thing worse in markets, as someone said, is when the person next to you has a lot of stuff which is going up a lot and you don't. I mean, and of course, that generates a lot of FOMO and a lot of questions. What to buy now? Should we buy a fund? And there are a lot of these PSU funds. Nimesh earlier was telling us there is one more new fund which is going to be launched shortly. Is that the way to do it? Or individual names? I was looking at something like a NBCC. It's, we're barely into February. The stock has doubled. It's up 110% this year. Your thoughts, Sudeep?
Absolutely right, Prashant. I think there is a massive euphoria going on around this PSU stocks. I'll give you a small story quickly. One of my friends suddenly, who's not in the financial markets, came to me and told me that I want to buy SCI. I asked him, why do you want to buy SCI? He said, look, Cochin Shipyard has gone up, Garden Ridge Shipyard has gone up, so I must buy SCI. It hasn't gone up that much. So I had to take time out and explain to him, please understand that these are different companies. Cochin Shipyard is in a different business. SCI is in a completely different business. So my request to investors have been that, please be a little cautious. Just don't jump into, some PSU names without understanding their business, what they're doing and what their prospects are. But, we can all try. But the fact is there is a massive euphoria going on and people are buying and making money. Nonetheless, I think, there is still value in PSU banks. That's what I believe. Particularly in a bank like SBI, if you notice, if you do the numbers, I think that's one bank which has gone up the least. PNB has shot up really. Bank of Baroda has shot up. SBI hasn't moved up that much. And is it that bad vis-a-vis ICICI or some other private sector banks that it has to be at such a huge discount to some of these private banks? So I don't believe so. And I believe State Bank of India should be valued much better. So there is merit in buying SBI, definitely. I'm not sure about the defense stocks at current level, nor am I sure about the railway stocks at current level. Of course, some of them are good companies. They've got an order book, which is probably will take them many years to execute. But the track record has never been anything great. I'm hoping that this will be different this time, but I still don't find comfort. Look at the oil marketing companies. There's a massive rally going on. Yes, they were relatively attractively priced, if you compare with the other PSU stocks. But there's an election coming. There's a huge amount of geopolitical uncertainty. I'm not saying oil will go back to 120, but the fluctuation in oil prices, upward movement in oil prices will have to be absorbed by these guys. They are doing a lot of capex, and rightly so, for the energy transition. BPCL is engaged in that, EV charging stations. These are good steps, but it will take some time to come to fruition, and the earnings will get depressed in FY25 for most of these oil marketing companies. So we need to understand this and buy with that kind of an outlook.
Point, as the market's closing out, by the way, I just want to point out that the bank Nifty has taken a knock, and a lot of the larger names, as SBI included, by the way, they're all now struggling down at the lows of the day. So that's a bit of a problem with the market. Banks continue to be at the disappointment. See the sharp drop after 3 o'clock that came in on the bank Nifty. And SBI, HDFC Bank, ICICI Bank, Axis Bank, across the board, selling on bank stocks. So we're short on time, just running into the close. You made your point on SBI, but overall talking about private banks, what do you think is the issue here? Because, every single pop, every single, rally is getting sold into. Is that how you expect things to be? And then, will a stock like Reliance then have to do the heavy lifting, therefore, on the index?
I think, Shulman, there are two different issues. The way I look at it, Reliance should have moved up much earlier. It's moving up now, and it deserves even a better valuation compared to where it is today. And most of the research reports suggest to that somewhere around 3,100, 200 is the range. And I think it will reach there. As far as the banking sector is concerned, my view is that, there is a bit of a sector rotation happening. People are moving money out of PSU and banks in general and putting in, I don't know why, but PSU stocks generally, public sector undertakings. somewhere this trade will reverse and you will see money coming back to the banking. If India has to grow at around 7% on a GDP and a nominal probably will be about 12-13%. So the banking sector probably will grow at double that pace. So we are looking at a 20% kind of a growth in the banking space. With that kind of growth, efficient private sector and even public sector banks will definitely do very well. People are talking about asset quality getting impacted going forward. Yes, asset quality may not be pristine, but the valuation at which some of these PSUs are currently definitely deserves a better valuation, even if we factor in a bit of deterioration in asset quality.
Sudeep, thank you very much for joining in. Enjoy your weekend. We've got a post-budget boom. Markets on our hands today. The Nifty ends at 21,852, but not before hitting a new all-time high of 21,126. We came off quite a bit from the day's high, close to about 250 points on the Nifty, and the Nifty Bank particularly saw a heavy bout of selling in the last 1 hour. The Nifty Bank ends with a cut of 250 points, and from the session highs, we're looking at a fall of about 950 to 100 points. CPSE index was the best performing index